Let's talk a little bit about the British consumer. The British consumer is struggling. Real wages are being squeezed. We saw next numbers out this morning. They were significantly below where the market had anticipated that they would be. There's a read across into Marks and Spencer's this morning. Is the UK consumer ready for a rate hike from the Bank of England?
Well, so will the Bank of England, call it a proper hike? I think the messaging is going to be very important this time around. So this is going to be the first 25 basis points if they choose to do 25.
I was going to ask you about that, yeah.
Yeah. So if it's going to be 25, there's nothing to suggest it won't be, but if you follow the BOJ's playbook, it's a bit different, right? But this will be an unwinding of the emergency conditions, the emergency accommodation initiated last year, right? Now, what happens up ahead, and I think that's where the market really doesn't have too much conviction. If you look at pricing for May or, around Q2, next year it's 50-50 at best and right now. So what the BOE's messaging will need to contain is, because they've acknowledged, actually, if you take out even the inflation impulse from the exchange rate, there seems to be a tightening in slack at a pace faster than they had previously envisaged. Is that sustaining? If it is going to sustain, then they can hike rates. If they think, actually, we were wrong on that, it was a temporary blip, then the case for hikes becomes a bit harder to justify. So, wages, that's going to be the key thing when it comes to slack.